A corporation and LLC, or a limited liability company, are two types of entities that can be formed that provides the owners of the entity with protection against lawsuits that arise as a result of operating the business. In either context, if a corporation is sued or an LLC is sued, the owner's assets, in a corporation we call that a shareholder, in an LLC we call that a member. The personal assets of the owner are protected from any potential liability that results as through operating the business. So it provides asset protection to the owners of the entity. One of the primary differences between owning corporate stock versus owning an interest in a LLC arises as a result of liability within the owner's personal life. For example, what happens if the owner of a corporation is in a car accident? It's the owner's fault, and the owner is now sued and there's a judgment issued against the owner. What right does that creditor have to the assets of the corporation? Well, one of the reasons corporations have become disfavored and aren't as good of an asset protection vehicle as the LLC is corporate stock is considered to be personal property. That means a creditor of the owner can seize that corporate stock in a foreclosure and then force a sale of the corporate assets to satisfy the judgment against the owner of the corporation. Whereas if the owner is sued and has an LLC interest, that LLC interest cannot be taken by the creditor. The only remedy in Arizona that a creditor can obtain against a member of an LLC is something called a charging order. And a charging order is a lien on distributions that the LLC pays to the distressed member. So in the LLC context, the assets of the LLC remain protected from liability that arises in the owner's life, versus in the corporate context, corporate stock can be foreclosed upon, and then a sale of corporate assets could occur to satisfy the judgment. The other reason LLCs are preferred over corporations is that LLCs aren't subject to the strict formalities of a corporation. A corporation is required to hold annual meetings of the shareholders and directors. An LLC under Arizona law is not required to hold annual meetings. So as a result of not following corporate formalities, that could ultimately lend to a situation where a creditor could pierce the corporate veil if those formalities aren't followed. Whereas in the LLC context, you don't need to worry about that because there are no formalities under Arizona law that an LLC member is required to perform. One of the nice things about an LLC versus a corporation, under the tax code, corporations can be taxed one of two ways, either as a C corporation or as an S corporation. A C corporation, you hear that term commonly used. It's not a type of legal entity. A C corporation refers to subchapter C of the Internal Revenue Code. And under subchapter C, if a corporation elects to be treated as such, then that corporation files a separate tax return and it pays tax on the income that the corporation generates. A corporation can also be treated as a subchapter S corporation. under the subchapter S rules, the corporation itself does not pay any tax. An S corporation is referred to as a pass-through entity. So the corporation files an informational return with the IRS, and then in addition to that, as part of that return, each shareholder of the corporation receives a form that contains the tax information that shareholder needs to report on its own 1040. That form is called a Schedule K1. So that's what each shareholder of the corporation receives to use to determine what they would owe with respect to their share of the corporation's earnings. There are some requirements on who is eligible to be a shareholder in an S corporation. Generally speaking, you have to be an American citizen, and you cannot have more than 100 shareholders in the corporate context. So in conclusion, a corporation can only be treated as a C corporation or an S corporation. One of the nice things about an LLC is the LLC members can elect to choose how the IRS will treat the LLC for federal tax purposes. So if you are a single member LLC, you could potentially be taxed one of three ways. The first way, and the default classification, is a sole proprietorship or disregarded entity. Under this method, the member of the LLC does not file a separate tax return. All of the earnings of the LLC are reported on that member's 1040 or personal tax return. If it's an operating business, that would be on Schedule C. If it's a business that invests in rental property, that would be on Schedule E. A single member LLC can also be taxed as a C or S corporation. And then additionally, if you have a multi-member LLC, by default, the IRS will treat that LLC as a partnership, but the members can also elect to have it treated as a C corporation or an S corporation. So a multi-member LLC can be taxed as a partnership, a C corporation, or an S corporation. It's all up to the members to make that decision on how they want it classified for tax purposes. One of the considerations to make when forming an LLC is, what state should I form my new LLC in? And a primary consideration that a lot of our clients have is privacy and asset protection. So they want to remain anonymous with the public, and they also want to form in a state with good asset protection laws. I get asked frequently about forming Delaware and Wyoming LLCs for Arizona residents. And although those states are good from both an asset protection standpoint and a privacy standpoint, the problem with forming an LLC in Wyoming or Delaware is that your annual maintenance costs as an Arizona resident will be much higher than if you were to form an Arizona LLC. The reason for that is, one, in both states, you have to find a registered agent to accept legal process if the company's ever sued, and that might be $150 to $200 per year to maintain that service. And then additionally, both states require that you file an annual report each year with the Secretary of State. So in Wyoming, Wyoming charges a $50 a year filing fee to file that report. Delaware, that report can run between $300 to $400. So it's more expensive to maintain these entities and keep them in good standing if they're formed in one of those states. Versus in Arizona, there's no filing requirement. And if you had to hire a registered agent, it would be the same cost. So that's a consideration in forming or in choosing a state to form your LLC in, is what are you looking at on an annual basis to keep that LLC in good standing? And is that cost worth the added benefits that those states might provide? If you have any questions about LLCs or corporations, feel free to give me a call, and I'm happy to answer any of those questions for you.